The main thing is you're going to have to do a major paradigm shift. And that paradigm shift deals with this. When you were born under contract, and most people don't realize this. You were born under contract, and that contract says you're going to be charged interest. And that interest is going to accrue your whole life, and you're going to pass that interest on to your children and your grandchildren. Where is this contract found? The contract is called money. It's currency, and it's controlled by the Federal Reserve. We do not actually own this money. The Federal Reserve is a private bank, and they own this money, and we rent it. And because we rent it, we have to pay interest on it. That's just how the game is played. So you have to understand this. This right here is a contract, and that contract earns interest for the Federal Reserve. Now, what's really interesting is when you go out and you do a sell, let's say that it's a $1,000 sell, and you take one item that's $200, you can take another item that's $200, and you mash them together. Now these two things cost you $400, and then you turn around and you sell it for $1,000. Well, all of a sudden you've created out of thin air $600 that you have to pay taxes on and pay interest on. But does the Federal Reserve actually go out and print it? No, what it is they own the name dollar. And because they own the name dollar, you are being charged interest on that name now. That's why we have electronic currency now, is because when dollar bills are done electronically, you pay interest on it, and the Federal Reserve doesn't even have to print money. So that's what's really, really kind of strange about this whole thing, how the system works. So what we're going to talk about is the 3 keys. And the first key is to copy how contract currency flows. So you're going to be creating your own currency, your own contract. So let's take a look at that. First off, you've got the Fed's corporate contract, which is the dollar bill. And of course, it's not just paper, it's also electronic. But for right now, we're going to look at just the contract side of it. It's privately owned, and so they control its quantity, they control its circulation, they control its interest rate. And then if you look at it according to state and federal government, they control how much you keep or how much you're renting. They control when you pay it. Now we're talking about taxes. They control the price to create it and use it. So in other words, if you want to create dollar bills, there's a price in doing it, and it's called taxation. Now let's look at the World Bank or those that deal with the exchange. They make off of every time a card is swiped, they take a portion of both sides of a transaction. They actually are involved in that exchange, and sometimes it'll deal with just one side, sometimes it deals with both. Even when it's bank to bank electronically, they can take a percentage. So a lot of people look at Venmo and they're like, oh, it's free. No, it's not free for them. They're just trying to build up their clientele to the point where you're used to using it. And because you're used to using it, when they do start charging, they'll probably start with businesses, and then they'll move on to consumers because you're already in the habit of doing it. Credit card companies. Now, credit card companies are kind of interesting because they create nothing, yet they're making money off of your work. They're making that percentage, that huge amount off of small businesses. And here's what's really interesting. I think, I can't remember if it was 2019, but I think the major credit card companies did $800 billion in income, 2019, 2020. But $800 billion off of small businesses. But here's what's interesting. It's not really 800 billion. You actually gave them several trillion dollars in assets called contracts. And those contracts are earning more money. It's a massive amount of money, and it's all done mainly by small businesses. That's why small businesses really are the driving force in America.